Hello everyone, welcome to Study IQ. Study IQ, in this video, I will bring to you the banking awareness for the month of May. This is part 1 in English. Let's start the video. Now let's start with the RBI circulars. This is a circular from 24th of May. Reserve Bank of India has imposed a monetary penalty on a company called Hero FinCorp. Now, what is Hero FinCorp? Hero FinCorp is a non-banking financial company. Look, Reserve Bank of India puts fine on hundreds of companies, okay? But this is a very big company. This is a very big NBFC and it gives a lot of loans like auto loans, for example. So it is categorized as a NBFC and the fine is 3,10,000 rupees. 3,10,000 for not complying with the NBFC rules and regulations of 2016. Now, under which section of the RBI has RBI taken this decision? So RBI has put the penalty because RBI gets its power from section 58G and section 58B of the RBI Act of 1934. So remember the section 58B and 58G of RBI Act 1934, and there was a non-compliance, which means the company was not following the rules and regulations of the NBFC directions of 2016. Now let's talk about three things that RBI has launched. This is a circular from 28th of May and all the three are very, very important. So there is Pravaha, there is RBI Retail Direct Mobile App, and there is FinTech Repository. So these three things have been launched by the RBI. Now let's take a look at one by one. First, let's talk about Pravaha. You should know the full form also. Platform for Regulatory Application, Validation and Authorization Portal. Now in the exam, they can easily ask you what does V stand for in Pravaha, or they can ask you the full form. So basically this is a portal where any regulated entity like a bank or a NBFC, they can take approval, they can take authorization, license or regulatory approval from the Reserve Bank of India. So this is a secure and centralized web-based portal. Any individual or any organization, if it wants to take any license or authorization or approval from RBI, it can apply here and RBI will respond in a time-bound manner. Also, you can track and monitor the status of your application in real time. And around 60 application forms covering different regulatory and supervisory departments of RBI have been made available on the portal so far, but in time more and more application forms will be available. And look at the website pravaha.rbi.org.in. Now let's talk about RBI Retail Direct Portal. So basically in November 2021, RBI started a portal or a website called RBI Retail Direct Portal. Okay. Now they have launched a mobile app for the same. That is the only thing. So through this mobile app, it will become much more easy for you to access the RBI Retail Direct Portal. Now, why was RBI Retail Direct Portal launched? It was launched so that the retail investors like you and me, we can go on this portal and we can open a gilt account. We can open a gilt account, and after making a gilt account, we can invest in the government securities. We can invest in the government securities like the treasury bills, all these things. So if you want to invest in government securities, the best way is go to RBI Retail Direct Portal or download the RBI Retail Direct mobile app and make a gilt account and then invest in the government securities. It is incredibly easy. And this app is available on both iOS and Android. Now let's talk about the third thing which the RBI has launched recently, which is called FinTech Repository. A repository means a storehouse of information. For example, Wikipedia is also a repository because it is a storehouse. It is like a warehouse or a godown of information, right? So FinTech Repository, as the name says, so FinTech Repository aims to capture the essential information about the FinTech companies in India, their activities, their technology, which they are using, and all of these things. So all the FinTechs are invited by the RBI to share knowledge with others on FinTech Repository. Doesn't matter whether you are a approved FinTech or not. FinTechs are approved. They are regulated by the RBI only. Financial technology companies are regulated by the RBI only. So FinTech, whether it is regulated or unregulated, which means like if it has not got the license so far, they can still contribute to the knowledge on FinTech Repository, right? Now, one more thing has been launched by the RBI, which is called MTech repository. Here, what is the meaning of MTech? MTech means emerging technology. Just like fintech means financial technology, MTech means emerging technology. So emerging technologies like artificial intelligence, machine learning, cloud computing, DLT. What is DLT? Distributed ledger technology. Distributed ledger technology and quantum science and all these things. So if you want knowledge about those, if you want to adopt, if you are, for example, a small bank, you don't have the means or the knowledge, how do I integrate AI? Just go to mtechrepository.rbihub.in. And these both the repository, whether it is a fintech repository or the MTech repository, both of these are managed by the Reserve Bank Innovation Hub. Now, what is Reserve Bank Innovation Hub? So Reserve Bank Innovation Hub was created by the Reserve Bank of India in 2022. Reserve Bank Innovation Hub. When was it created by the RBI? It was created in 2022. And where is the headquarter of the same? So headquarter is located in Bangalore. By the way, it is a wholly owned subsidiary. It is a wholly owned subsidiary of the Reserve Bank of India. It was launched on 24th of March 2022. It is headquartered in Bangalore. And is it a commercial company? No, it is a non-for-profit company. In other words, it is a Section 8 company under the Companies Act of 2013. And when it was set up in 2022, its authorized capital was 100 crore. So it was launched with the initial capital contribution of 100 crore. And what is the job? As the name says, Reserve Bank Innovation Hub. So it does all the innovation and it brings world-class innovation to the financial sector in India on the behalf of the Reserve Bank of India. On the behalf of Reserve Bank of India. Now let's move to a very technical circular, but don't go into too much detail about this. Just remember that in the stock market, what happens is a lot of people do trading, and lot of trading, is backed by the banks. But there is a limit that RBI has put. So there is something called irrevocable payment commitment. A bank does a lot of payment commitments, right, to the traders, and those are irrevocable, which means they cannot back off from that. They cannot say no later on. So how much is the maximum risk that a bank can take in a capital market? Look, earlier there was a T+2 settlement. Then we moved from T+2 to T+1. So currently we are following T+1 settlement cycle. And now we are trying to move to T+0, but that will take some time, okay, because it is in the pilot stages. So that will take some time. But currently we are following T+1. So now any bank, so the custodian bank, the maximum intraday risk that a custodian bank which is issuing irrevocable payment commitment in the capital market is 30% of the settlement amount. Just remember this for your MCQ, that is good enough. 30% of the settlement amount is the maximum risk that is allowed to a bank. That's it. Now where this figure comes 30%? Because usually in a day, a share, any share that you have invested can fall down by 20%. Usually, yes, some shares can fall by more, but usually they can fall by as low as 20%, or you can say as high as 20%. And 10% is extra safety margin. So they have given 30%. That is good enough. So 30% of the settlement amount is the maximum intraday risk which is available to the custodian bank. Now let's talk about Exim Bank, that is Export-Import Bank of India. Export-Import Bank of India has given a loan to a country called Guyana, right, which is in South America, Guyana. And this is a loan $23.37 million. Now, why they have given this loan to Guyana? Because Guyana wanted to buy 2 Dornier aircrafts from India. And these Dornier craft, they are German technology, but they are manufactured in India by Hindustan Aeronautics Limited. So they are called Hindustan 228-201 aircraft, or simply Dornier aircraft. So they will be purchased by Guyana, and Guyana wanted a loan for that. So that has been approved by the Exim Bank or Export-Import Bank of India. Now let's talk about All India House Price Index, which is conducted every quarter. So here I am talking about the 4th quarter of the financial year 24, which means I am talking about January, February and March 2024, because these 3 months were the last quarter of the financial year 24. Now, in house price index, we take the base year as 2010-11. So financial year 11 is the base year. This can come as an MCQ, and the base year value we take as 100. Okay. And all the data about house price index is available on DBIE portal. That is Bank's database on Indian economy, or DBIE portal of the Reserve Bank of India. So what are we trying to do here? House price index. We see the movement of the house prices. Okay. We compare it with the previous quarter. So here we are looking at the fourth quarter, quarter number 4 of the financial year 24. So we will compare it with the third quarter of the financial year 24, and we will also compare it with the corresponding quarter of the previous financial year. So we will compare it with the fourth quarter of financial year 23. How much has been the movement? First, let's talk about year on year. Year on year means let us compare it with the fourth quarter of the financial year 23. So in this 1 year period, the maximum movement in the house prices has happened in Ahmedabad, which is 11.7%, which means the house prices in Ahmedabad have become on an average 11.7% costlier. And the minimum movement was in Jaipur, so minus 0.3%. So in Jaipur, the house prices have actually decreased by 0.3% in this 1 year time, from quarter 4 to financial year 23 to quarter 4 of financial year 24. And you know, obviously we cannot do this in all the cities of India. So we take 10 big cities like Delhi, Chennai, Bangalore, Ahmedabad, Lucknow, Kolkata, Kanpur, Kochi. So there are 10 cities in which it is done. Okay, All India House Price Index Survey. Now let's talk about quarter on quarter. Quarter on quarter means what? Here we are comparing the fourth quarter of the financial year 24 with the third quarter of the financial year 24. So if you see, then the HPI increased by 0.9%. Okay, HPI increased on an average. HPI increased from third quarter to fourth quarter in 3 months time. It increased by 0.9%, and in 1 year time, the average HPI increased by 4.1%. So in 1 year time, it increased by 4.1%, which means in India, the average house prices increased by 4.1%, and in the quarter basis, it increased by 0.9%. Now let's talk about a circular that came on the penultimate day of the May month. This is about the framework for recognizing self-regulatory organizations for the fintech sector. Now look, fintech sector is increasing, right? Fintech is becoming very, very popular. You know, companies like Paytm, everyone uses them. Razorpay, Google Pay, PhonePe, and I can name another 1000 companies. Now for the fintech sector, there has to be a self-regulatory organization. Look, fintech sector is regulated by the RBI, this you know. But what if there is a self-regulatory organization that helps them to achieve all the compliances, that warns them in case they are going off the path, they are not following proper rules. So that is called a self-regulatory organization. So, you know, fintechs are regulated by the RBI, but RBI may not have the time to take a look over thousands of fintechs every time. So these are the fintechs and this is the RBI. So it will act like a bridge between both, and it will be called as SROFT, or self-regulatory organization for the fintech sector. FT is fintech, SRO means self-regulatory organization. So Reserve Bank of India on 15th of January 2024, they gave a draft. So there was a draft circular, and draft circular is always given to invite the comments and feedback. Now, whatever the feedback and whatever the comments were there, RBI took that into account, and now they have released the final framework. So what is the requirement? First, let me tell you what is expected from the self-regulatory organization fintech, SROFT. Well, they have to represent the fintech sector. They have to be the true representatives of the sector, right? They have to promote the fintech sector. They have to do everything possible. So they have to work on innovation. They have to, they have to devise the rules and regulations for the sector that have to be followed by all the companies. They have to be development oriented. They have to focus on research and development, bridging the skill gap. They have to share the best practices. They have to be independent from influence. So look, when so many companies will be a part of it. So for every self-regulatory organization, many fintechs will be members of it. So obviously some will be big fintechs like Google Pay, PhonePe, Paytm, etc. They should not exert their influence. So it should be impartial. And it should also act as an arbiter of disputes. It should basically do arbitration, between different disputes. If there is a dispute between PhonePe and Paytm, then it should be able to do the arbitration of dispute between the two parties. It should encourage the members to subscribe to the regulatory expectation, as I said, and it has to be a repository of information. So this is what this self-regulatory organization will do. So what are the conditions? If any company wants to become a self-regulatory organization for fintech sector, then there are certain conditions. First of all, it has to be a non-for-profit company. That is, it has to be a Section 8 company under the Companies Act of 2013. Then the shareholding of the SRO should be sufficiently diversified and no entity should hold 10% of or more of its paid up share capital. For example, let's say PhonePe, Paytm, Google Pay, right? And let's say BharatPe. These are 4 big fintech companies and they are a part of self-regulatory organization. Now, obviously for self-regulatory organization, there will be multiple other organizations also. So let's say there are 100 fintech companies and there are these 4 big fintech companies also. So these 4 big and 96 smaller companies. Okay, let's put it this way. They are a part of this self-regulatory organization. Now, none of these big companies or any company for that matter should own more than 10% or more, right? So, because if they own in the self-regulatory organization, if they own more than 10%, they will exert undue influence. So in a self-regulatory organization, none of the fintech companies which are a part of it, because see, this self-regulatory organization, it will be coming together of the fintech organization, right? So it will be coming together of the fintech organization. So no entity should own 10% or more of the paid up share capital. This is a very important condition. And of course, it has to be transparent. It has to be very clear in its objectives, right? And the net worth, the minimum net worth of the self-regulatory organization fintech should be 2 crore within a period of 1 year after given recognition by the RBI. So as soon as you get the recognition by the RBI that now you are a SROFT, within 1 year, your net worth should be 2 crore rupees. So, and the self-regulatory organization should have the capability to establish the necessary infrastructure. It should have a robust IT infrastructure so that it can deploy technological solutions within a reasonable time frame. So these are the conditions and these two can be the MCQ. Like what is the maximum shareholding permissible for an entity which is a part of SRO? The answer is not more than 10%. So it has to be less than 10%. 10 or more is not permissible. And they can also ask you what is the minimum net worth required for a self-regulatory organization for the fintech sector. The answer is 2 crore rupees. Now let's talk about HSBC Limited. It is a authorized dealer bank. Basically, there is a penalty, very heavy penalty put on HSBC. This penalty is 36,38,000. So 36,38,000. This is the monetary penalty which has been put by the RBI on HSBC Limited. Why? Hong Kong and Shanghai Banking Corporation. Now, why have they put this penalty? That is an important question. See, they have put this penalty because HSBC was not following the proper rules and regulation under the liberalized remittance scheme. What is liberalized remittance scheme? That I will tell you in a bit. So liberalized remittance scheme is governed by the Foreign Exchange Management Act of 1999. I repeat, the liberalized remittance scheme is governed by the Foreign Exchange Management Act of 1999. So liberalized remittance scheme, it was started in 2004 by the Reserve Bank of India. And in the liberalized remittance scheme, you can send $250,000 per year abroad. Now, when I say you can send, so you can pay for your children's college fee if they are studying abroad, or you can, if you are a tourist, if you visit, for example, America, you can spend this much money abroad. There will be no action. There will be absolutely no action that will be taken by the RBI till $250,000 per year. And this HSBC Limited was not following the proper rules and regulation. It was violating the liberalized remittance scheme, which works under the Foreign Exchange Management Act of 1999. That is why this action was taken. Now let's come to the annual report of the Reserve Bank of India, annual report for the financial year 2024. Now, first of all, what is annual report? So annual report is a statutory report of the Reserve Bank of India's Central Board of Directors. Reserve Bank of India's Central Board of Directors, they give this annual report. And this report covers the working and the functions of the RBI in the last 1 year. So from when I say financial year 24, you already know what this means. It means from 1st April 2023 to 31st March 2024. Now, the Reserve Bank of India, the annual report which they publish is presented to the central government. They give a copy of it to the central government under which section? Under section 53(2) of the RBI Act of 1934. So RBI present their annual report to the central government under section, this can be a good MCQ, under which section? Section 53 of the RBI Act of 1934. So what does annual report say? Now look, annual report was very, very big. It was 310 pages. I have read every page and I have made sure that I give you only what is required from exam point of view. That I will do in just 10 minutes. Okay. First of all, what was the real GDP growth rate of India according to the RBI annual report? In the financial year 24, we grew at 7.6%. We grew at 7.6%, right? Now, and what will be our growth rate in the financial year 25? In financial year 25, which is going on right now, we will grow at 7% according to the RBI annual report. Now, you also know that RBI every 2 months, it gives a monetary policy. In the last monetary policy, which happened in April 2024, they said 7%. In the latest monetary policy, which happened in June 2024, they said 7.2%. So monetary policy keeps on changing the GDP projections. But according to RBI annual report, it is 7%. So in the exam, they will mention that whether they are asking as per the latest RBI monetary policy report or they are asking as per the RBI annual report. Since the RBI monetary policy is quite volatile, it keeps on changing. Usually in the exam, they will not ask that. Either they will ask you the NSO data, National Statistical Office, according to them, what is our GDP growth, or they will tell you, they will ask you about the RBI annual report. So for financial year 25, it is 7%. And for the last financial year, it was 7.6%. Now, let's talk about the direct tax revenues that we are targeting. See, first of all, you have to understand what is a direct tax. Okay, what is a direct tax? So direct tax is like your income tax, that is a direct tax. Corporate tax, that is a direct tax. The capital gain tax, that is a direct tax. Like gift tax, wealth tax, all of these are direct taxes, right? So a direct tax is levied on the people's income or people's profit, like income tax, property tax and all. This is direct tax. So what are we targeting in the financial year 25? What is our target? For direct tax collections, we want 6.7% of our GDP. So the central government's target is to achieve direct tax revenue of 6.7% of our GDP in the financial year 25, which is the highest in the last 30 years. We have never set this high a target. Now let's talk about some numbers, because numbers are everything, So let's talk about the balance sheet of the RBI first. Balance sheet. What is balance sheet? The size of the balance sheet. What is the meaning of the size of the balance sheet? Size of the balance sheet simply means your assets. So what are the what are the assets of the RBI? So in the financial year 24, when the financial year 24 ended, the assets of the RBI were 70.47 lakh crore. Okay, 70.47 lakh crore. Now, and what were they when financial year 23 ended? 63.44 lakh crore. 63.4. So there is an increase of how much? There is an increase of 7.02 lakh crore in just one financial year, from financial year 23 to financial year 24. The assets of the RBI increased by 7 lakh crore. The balance sheet grew by 7 lakh crore. And that is a jump of how much? That is a jump of 11.08%. So the balance sheet of the RBI grew by 11% approximate. Just remember the approximate. Okay, you don't have to remember 11.08. So it just 11%, and roughly it grew by 7 lakh crore or 11%. This is the first thing. Now, why it grew? Why the assets of the RBI grew so much? So that let me explain here. Now the size of the balance sheet increased because of this reason. So let's talk about the assets. Why the assets of the RBI increased? First, it was due to a rise in the foreign investment. So the foreign investment of the RBI, it increased by 13.9%. 13.9%. The gold increased by 18.26%. And the loans and advances increased by 30%. Loans and advances increased by 30.05%. All of this led to increase in the assets of the RBI. Once you give a loan, now you have to take it back, so it becomes your asset, right? So gold and also the foreign investment of the RBI, there is an increase by this much percentage that led to an increase in the assets of the RBI. So that can be a very good question. Also, what about the liabilities of the RBI? So on the liability side, if you see, the expansion was due to an increase in the notes issued. So the notes that RBI issued increased by 3.88% in the financial year 24. The deposits, they increased by 27%. And the other liabilities, they increased by 92.57%. The other liabilities increased by 92.57%. Now tell me this, most of the assets of the RBI, are they in India or abroad? So the domestic assets, the one in India, are only 23.31%. What about the foreign assets of the RBI? So the foreign currency assets, gold, etc., all these things, so they were 76.69%. So if you compare it with the financial year 23, in financial year 23, 26% were the domestic asset. Now they have decreased by almost 2.7%. And 73.92 were our foreign assets. So the domestic assets of the RBI were 23.31% and abroad they were 76.69%. So you can say most of the assets of the RBI, they are abroad. And I will give you a breakdown of all that also. Now, how much is the money that RBI contributed to the contingency fund? Contingency fund. What is contingency fund? That I will explain you in a bit, but just remember the amount first. 42,819 crore. 42,819 crore. This was the money that RBI contributed to the contingency fund. So these are some numbers and these will give you a lot of confidence going forwards. Now, what is contingency fund? That I will tell you in 1 to 2 minutes. Now, the central bank's income. Okay, let's take a look at these very important numbers. First of all, how much is the money that the Reserve Bank of India transferred to the central government? They always transfer the surplus, the profit that they generate, right? But how do you generate profit? Your income minus expenditure, that is your profit. Income minus expenditure, that is your profit. So what is the income of the RBI in the financial year 24? The income was 2.75 lakh crore. 2.75 lakh crore was the income of the Reserve Bank of India, right? And if you compare it with the financial year 23, in financial year 23, the income of the RBI was 2.35 lakh crore. So it has increased significantly by 17%. It increased by 17%. Now let's take a look at the expenditure of the RBI. Now look at the expenditure, it reduced by so much. So in financial year 23, the expenditure of the RBI was 1.48 lakh crore, which decreased to just 64,000 crore, 64,694 crore in the financial year 24. Expenditure reduced by 56.3%, which led to a huge net income of the RBI. So income minus expenditure is the net income. So net income, you can see in the financial year 23, it was just 87,420 crore, but in financial year 24, it was 2,10,877.99 crore. Now here comes a question. So you see the income of the RBI, income minus expenditure, net income was 2,10,877 crore. But RBI transferred how much amount to the government of India? 2,10,873 crore. Now you will say this is same. No, you see carefully, there is a difference of 4 crore rupees. Where did this 4 crore rupee go? There is a difference of 4 crore. So that 1 crore each was sent to 4 funds of the RBI. So which are the 4 funds of the RBI where 4 crore was given? And you can see every year RBI transfers 4 crore. So which are these 4 funds? So one is the National Industrial Credit Fund, National Industrial Credit Fund. Then we have National Housing Credit Fund. Then we have the National Rural Credit Long-Term Operations Fund and National Rural Credit Stabilization Fund. So these are the 4 funds of the RBI where it transfers 1 crore rupees each to every year. So total 4 crore. So you minus 4 crore that, and the surplus that the government got from the RBI was 2,10,873.99 crore. Understood that? So this is a very, very important question, right? Very, very important question. And now let's come to the contingency fund. So contingency fund, why contingency fund is maintained by the RBI? So contingency fund is intended to protect the RBI from depreciation of, see, first of all, what is the meaning of the word contingency? It means emergency. So it is an emergency fund in case something goes wrong. Now what can go wrong? So, well, sometimes the value of the rupee significantly depreciates. The value of the government securities, they depreciate. There is always a risk from the monetary or the forex operations of the RBI. So that is why RBI keeps some contingency fund. And in the financial year 24, RBI transferred 42,820 crore rupees towards this fund. And after transferring this amount, total, what is the amount in the contingency fund now? So the total amount in contingency fund was 4.28 lakh crore. So this is like an emergency fund with the RBI. 4.28 lakh crore when the financial year 24 ended. On that day, the contingency fund had this much amount. And 42,820 crore was transferred to the contingency fund in the financial year 24. And why was RBI able to send so much money to the contingency fund? Because the RBI's gains increased. So RBI saw a gain of 83,000 crore from the foreign exchange transactions during the year, while interest income from the foreign securities increased to 65,000 crore. Now these numbers you don't have to know, but you just have to have a basic idea that RBI did very well. Now let's talk about the unclaimed deposits. When the financial year 24 ended, what were the unclaimed deposits in all the banks of India? So they increased by 26% and they were 78,213 crore. What are unclaimed deposits? Well, if you have a savings account and if you don't touch your account for 10 years, whatever is the money in your saving account, that is an unclaimed deposit. Or if you have a term deposit or a fixed deposit, FD or term deposit, and from the date of maturity, if you don't touch that amount for 10 years, then it also becomes unclaimed deposit. Now, of course, RBI wants you to claim these deposits. So they have launched a portal called Udgam portal. On the Udgam portal, you can get to know how much you have unclaimed deposits. So the total unclaimed deposits when the financial year 2024 ended was 78,213 crore. Now, what do the banks do with this unclaimed deposit? They send it to the RBI's DEA fund, Depositor Education and Awareness Fund. So what is the total amount in the DEA fund when the financial year 24 ended? It was 62,225 crore. 62,225 crore. Now there was a page on the agriculture aspects also. It was not very important, but I have just taken one or two lines which I thought would be important. The minimum support price. So minimum support price, look, there are various ways to calculate it, right? We'll not go into too much technical details of that, but the minimum support price that the RBI supports or the central government supports for both the Kharif and the Rabi season was 50% over the input cost. Now, what is the input cost here? Input cost means your fertilizer, your seeds, your machinery, or all that is input cost. So whatever is the input cost, right, you will get 50% more over that, 50% over the cost of production for all the crops. That is your minimum support price that the government supported. And Pradhan Mantri Garib Kalyan Ann Yojana, it increased by 5 years from 1st January 2024. It will run all the way till 31st of December 2028. For 5 years it has been extended now. And among the Kharif crops, the maximum MSP increase was seen in the Moong Dal. And among the Rabi crops, it was the Masoor Dal and the wheat, which saw highest increase in the MSP. Now let's talk about gross fixed capital formation. What was the gross fixed capital? What is gross fixed capital formation? So this is the investment that you do to create physical assets like the buildings, machinery, equipment, infrastructure. All of that is called gross fixed capital formation. So when you create physical infrastructure, then you increase the production capacity of the country, you give more jobs. So it is very, very essential to create physical assets. So the investment that you do in the physical assets is called gross fixed capital formation. So the gross fixed capital formation increased by 10.2% because the government of India is spending a lot on the infrastructure. What about the private consumption? So private consumption demand increased at 3%. And private consumption demand is very important, otherwise economy will not grow. So for example, one of the myth is that when the RBI cuts the repo rate, then obviously there will be growth because the money supply in the economy will increase. Banks will give easy, cheaper loans. People will take loans, But what is the guarantee that people will take loan? For that, the private consumption has to be high. If the private consumption is high, only then the people will take loan. Otherwise, doesn't matter how cheap the loans are, people will not take the loans. So the private consumption has to grow, and it grew at a slow pace of 3%. Now, inflation was, managed well by the RBI. So the headline inflation eased to 5.4%. And what about the core inflation? So core inflation also fell. What is the difference between headline inflation and core inflation? In headline inflation, we include everything. So we include the basket of goods. We also include the food and fuel prices. But in the core inflation, we only include the goods. We don't include food and energy or food and fuel prices, because food and fuel prices, they are very volatile and they keep on changing every day. That is why in core inflation, we do not include the food and energy prices. Now let's talk about the Indian rupee. Look, everybody knows that Indian rupee is depreciating, but it didn't depreciate as much as other currencies did. So Indian rupee depreciated by just 1.4% during the financial year 24. Yes, it displayed depreciation, but it displayed stability also, because 1.4% depreciation is not that much. If you see the other currencies of the EME countries, what is EME? EME means emerging market economies. Emerging market economy. So these are essentially the developing countries. Like some currencies, they fell as much as 10%, 5%, 8%. We depreciated at just 1.4%. So RBI did very well, I would say, in this regard. Also, the gross fiscal deficit, fiscal deficit of the government decreased from 6.4% to 5.9%. See, it was 6.4% in the financial year 23, but when financial year 24 ended, it was 5.9%. So in that regard also, government did very well. Now, merchandise exports, they decreased by 3.1% in the financial year 24 because the global volume of merchandise trade was also less. And imports of India, they decreased by 5.7%. So merchandise exports, they decreased by 3.1%. And the import of India, they decreased by 5.7%. Now, this report talks very comprehensively about the banking frauds. And I went very much in detail in this regard, right? First of all, let me tell you about the number of banking frauds. They increased. Now, in the financial year 23, how many financial frauds were there? There were 13,564, and they increased to, look at this, 36,075, almost 3 times. So there was an increase of 166%. 166% increase in the number of banking frauds. But you will be surprised that if you see the value or the amount, then it decreased substantially. So even though there were 13,564 cases of, these are the total number of banking frauds which happened in financial year 23, the amount of fraud was 26,127 crore in the financial year 23. And and this amount is from how many cases? 13,564 cases, right? Now look at the number of cases. They increased 36,075 cases, but how much was the amount of fraud? It was just 13,930 crore. So if you see the amount, then it decreased by a massive 46.7%. So yes, the number of frauds, they increased by 166%, but the amount of fraud was reduced by 46.7%. Now let's go further deep into the frauds. So if we see the bank-wise frauds, which bank had more frauds? Private sector bank or public sector banks? It is the private sector banks. So in the last 3 years, the private sector banks reported maximum number of frauds, but the public sector banks, they contributed maximum to the fraud amount. Now you will say how it is possible? Because the frauds in the private sector banks were low ticket size, low in amount, whereas the frauds in the public sector banks, they were high in amount. Why? Because in public sector banks, the frauds were loan frauds. So for example, a lot of things are in the gray. The bank manager will decide whether to give you the loan or not. If I want a 50 crore loan, I can always give a 5 crore bribe to the manager and get my loan approved from a public sector bank. That is what happens. These things are not there that much in the private sector banks. There is much more rigorous inspection and all these things in the private sector bank. That is why the private sector banks, their non-performing assets are always less. They are always paranoid. In public sector banks, since the regulatory oversight is not that much, now of course it is improving. You can see the public sector banks are becoming profitable. But traditionally, the loan frauds, they were a hallmark of the public sector banks. So I repeat, the private sector banks, they have maximum number of frauds, but the fraud amount was maximum in the public sector banks. And what type of frauds were the maximum? So these were the digital payment or card, internet, or all these frauds, which were highest in number, but they are low value. They are low value frauds. Like somebody frauded you, let's say 200 rupees of UPI. Those are low ticket size frauds. Whereas if you see the high value frauds, these are the loan portfolio or advances category frauds, right? So the small value frauds are the card, internet, digital payments fraud. They were the maximum in the private sector bank, but the frauds in the public sector banks, they were high because they were mainly in the loan portfolio. So they were mainly high amount or high value frauds. Now, the RBI annual report is not over. However, there was one or two things that were mentioned in the report, which I which I corresponded with another circular that was a circular on 3rd of May, because this is a circular that has made the banks of India very nervous. Okay, and this is a circular about the project financing. That is why I included in the RBI annual report to give you a better idea. And again, this is a draft, so comments and feedback is invited by the RBI, and the banks are not happy at all. And I will tell you the reason for that. First of all, you have to understand what is project financing, on which this circular is about. See, project financing means, let's say I have a company called GG Power Limited. I have a company called what? GG Power Limited. And I want to set up a thermal power plant. Thermal power plant means what? Where coal is burnt to produce electricity, right? And I want a loan of 100 crore for the same. So this is called project financing, where a bank is financing an entire big project, right? So these are the guidelines by the RBI, and these are draft guidelines. The final guidelines will come after 3-4 months, because RBI will take into account the feedback and the comments of the people. So what are they saying? Look, they are saying that the bank has to increase the provisioning. Let's say I have taken a loan of 100 crore because I want to set up a thermal power plant. My company is called GG Power Limited. Currently, let's say one bank has given me the loan. Punjab National Bank has given me the loan of 100 crore. How much provisioning they have to do for this project finance? 0.4%. 0.4%. Which means that if they are giving me 100 crore, 0.4% is how much? 0.4% is just 40 lakh rupees. This much money the bank has to keep a provisioning for this, just in case it becomes a non-performing asset, right? So the amount of provisioning is very less. It is only 0.4%. Now what they are saying is that the provisioning has been increased to 5%. Now the banks are crying. Why? So if Punjab National Bank gives me a loan of 100 crore, 5 crore extra they have to keep with themselves. On this 5 crore, they cannot earn anything. That is the problem. They cannot give this 5 crore as a loan. So a part of their deposits will not be productive assets for them. So what do the banks want? They want as low provisioning as possible, so that their capital is free and they can give it as a loan. But if provisioning is 5%, then they will start crying. And look, 100 crore is a very low amount. I'm saying these projects big projects, big bridges, thermal power plants, hydropower plants, the amount is like 2500 crore, 4000 crore, 6000 crore. So just imagine 5% would be a huge dent in the profits of the bank. Now that is where RBI said that I understand your concern, so I am reducing it on certain condition. So RBI said that there are three phases. Okay, so let's say there is a thermal power plant. It is in the construction phase. So in construction phase, the risk is the maximum because it is still undergoing construction. Sometimes the project may not take off. Sometimes half the project is complete and then the person says, I will not make it. And all those housing projects, you must have seen so many housing projects, they are in the limbo. They don't move forward. So in that, you make a provision of 5%. Okay. Now, when the project is operational, so this thermal power plant is now ready. So the electricity it is generating, it is ready, it is operational. Okay. Then you reduce the provisioning from 5% to 2.5%. Okay. So once the project is operational, you reduce the provisioning requirement from 5% to 2.5%. And once the project is generating net cash flow, it is profitable. There is a positive net operating cash flow. Positive cash flow means what? It is making profits. Then you reduce it further to 1%. Then you reduce it further to 1%. So earlier provisioning is 5%. That is construction phase. When the project is ready, it is operational, then you reduce it to 2.5%. You free up some of your money and then you free up more money when it is profitable. So then it is 1%. Because it is profitable, so we can say that yes, they will return back the money and all. I mean, risk is less. No, they are profitable. So you reduce the provisioning to 1%. So this is what RBI is saying, but obviously banks are not liking it because construction phase is very big. Sometimes project takes 5-6 years for setting up, for construction. So the banks are not happy at all. Now, these are the regulations. So RBI has made very tight regulations, 5% provisioning in the construction phase. Now there are some other guidelines also. Let's talk about these guidelines. Okay. The Reserve Bank of India has stipulated minimum exposure of the banks in consortium lending. In the case of project financed under consortium arrangement, where the aggregate exposure borrowing is up to 1500 crore, each lender should have a minimum exposure of 10%. What is the meaning of this? Look, I gave you an example of only one bank where I wanted to set up a thermal power plant and I took a loan of 100 crore from the Punjab National Bank. But usually it does not happen because these projects are very big and the loan amount is not this small that it is financed by one bank. So there is something known as consortium lending. Consortium means a group of banks. They are giving me the loan together. Now let me give you an example. Let's say I want to set up a big thermal power plant, a coal thermal power plant in Gurgaon, okay, in Gurugram, Haryana, and I need a loan of 1000 crore. Obviously, it's a big loan, and so I will approach three banks. Okay, I will approach State Bank of India, I will approach Union Bank of India, I will approach Punjab National Bank. I'm getting this loan from three banks. Three banks are financing it, which means I am doing consortium lending. Okay. Now, is it possible that this 1000 crore I need? Okay. Is it possible that SBI gives me, let's say, 50 crore? Union Bank of India gives me 50 crore and Punjab National Bank gives me the remaining 900 crore. Is it possible? Well, banks say, okay, we will do that. But is it possible? Is it allowed by the RBI? No, it is not allowed. Because when the loan amount is up to 1500 crore, here my loan amount is less than 1500 crore, then every lender should have a minimum exposure of 10%. So what is the 10% of 1000 crore? It is 100 crore. So the minimum loan that each of these will give me is 100 crore. So the minimum loan that SBI will give me is 100 crore. Minimum that UBI will give me is 100 crore. And if I take the bare minimum from them, then Punjab National Bank will give me the remaining 800 crore. Have you understood it? So when the loan that you are taking from a group of banks, when you are doing consortium lending, and if the loan you are taking is less than 1500 crore, then every lender, the minimum exposure of them has to be 10%. And this is the minimum exposure. Okay, so minimum 10% will be financed by every lender. Now let's come to the second condition. What if the loan that you are taking is more than 1500 crore? So let's say my company GG Power It wants to set up a thermal power plant and I need a loan of 4,000 crore. Okay, 4,000 crore. Now I am approaching again State Bank of India, Punjab National Bank and Union Bank of India. I am taking from these three people, these three banks. So how much will they give me? Now look, the exposure is now more than 1500 crore because I am taking 4,000 crore. So in this case, the individual exposure should not be less than 5% or 150 crore, whichever is higher. Now what is the 5% of 4,000 crore? 5% of 4,000 crore is 200 crore. 200 crore. Now 150 crore is more or 200 crore is more? 200 crore is more. They're saying whichever is higher. So 5% of the amount that I want to take is 200 crore. So the minimum that each of these bank will give me is 200 crore. I repeat, the minimum that each of these banks will give me is 200 crore. 5% or 150 crore, whichever is higher, if the amount is more than 1500 crore. Right? Now let me give you another example. Let's say I want to set up a thermal power plant and I need a loan of 2000 crore. And I again approach State Bank of India, Union Bank of India and Punjab National Bank. Now in this case, tell me what is the minimum loan that each of them have to give me. So again, apply the formula. 2000 crore is more than 1500 crore. Okay. So 5%. What is the 5% of 2000 crore? 100 crore. Oh, 100 crore or 150 crore, whichever is higher. So whichever is higher, 150 crore. So in this case, they will give me minimum 150 crore each. Minimum 150 crore each. Okay. So this is the condition that has been set by the RBI for project financing. Another very good thing that I found out in the circular, the original or revised repayment tenure, including the moratorium period, shall not exceed 85% of the economic life of the project. Brilliant. What is the meaning of this? See, every project has a life. For example, if you are taking a loan for a bridge, you are defining the life of the bridge. It is not like this bridge will remain forever. So let's say the life of the bridge is 30 years, right? I'll give you a practical example. Recently, you know that in Jammu Kashmir, there is a Chenab bridge, the world's highest railway arch bridge, which has been made 359 meter. What is the life of the Chenab bridge? 120 years, right? So for every project, I am talking about project financing. For every project, there is a life. Now let's say for my thermal power plant, which I have set up, I'm saying, okay, the life is 40 years. It will run properly for 40 years. Okay, that is what I expect. So what is the repayment period? Now I have taken a loan of whatever is the amount, 500 crore, 1000, 2000 crore, let's say 4000 crore loan I have taken from multiple banks. So what is the repayment period? Repayment period cannot be more than 85% of the economic life of the project. Now here the life of the project is 40 years. So what is 85% of it? You calculate that. It is 34 years. So the repayment period, including the moratorium, cannot be more than 34 years. So if I go to the bank and I tell them, look, I will return your loan in 50 years. It is not possible because the maximum repayment period is 34 years. That also including the moratorium. What is moratorium? Moratorium is a period where the banks say, okay, no need to pay for now, you pay later. For example, I want to do MBA. Okay. And I need 10 lakh rupees for doing my MBA. Now I don't have 10 lakh rupees. So I have taken an education loan from HDFC Credila. HDFC Credila is a education loan company. Okay. I have taken a loan of 10 lakh. So obviously I will be doing MBA for 2 years and I will start earning only after that when I get a job or campus placement. So for these 2 years, there is a moratorium on the loan. My EMI will start only after 2 years. And let's say I have to pay back this loan in 5 years. So the repayment period will be 5 years plus 2 years, 7 years. Including moratorium, it is 7 years. So here the repayment period, including the moratorium, cannot be more than 85% of the economic life of the project. Now let's talk about digital payments because this RBI annual report talks extensively about digital payment. Look, 4 out of 5 digital payments are happening in India through UPI. Wow. 4 out of 5 means what? 4 by 5 into 100, which means 80%. Well, almost 80%. Exact is 79.7%. So of all the digital payments, I repeat, of all the digital payments that happened in India in the financial year 24, 79.7% payments happened through UPI. And how many digital payments happened in India in financial year 24? It was 164.6 billion, which is 16,440 crore, or 164.4 billion. 1 billion is 100 crore. So you simply multiply this number by 100 and you will get this figure, 16440 crore. These many transactions. And what about financial year 23? In financial year 23, these were 113.9 or 11390 crore. And what is an increase? The increase is an astonishing 44%. So the digital payments in India are up by 44% from financial year 23 to financial year 24. So this is the total number of digital payments. And out of this, almost 80% payments are through UPI. So you can imagine UPI is growing like crazy. Now let's talk about Payment Infrastructure Development Fund. Payment Infrastructure Development Fund is a scheme that was started by the RBI, where RBI is financing the payment infrastructure, whether it can be digital or it can be physical. So RBI gives money or incentivizes the point of sale, the mobile point of sale terminal, if you want to set up interoperable QR codes. So all of these are subsidized by the RBI. So in financial year 24, the number of the point of sale terminals in India, they increased by 14.3%. Now in India, there are 89 lakh point of sale terminals. So they increased by 14.3% compared to the previous year. What about the Bharat QR codes? Bharat QR codes, they increased by 16.1%. So in India, there are currently 62 lakh Bharat QR codes. Their number increased in financial year 24 to 62 lakh or 6.2 million, and it increased by 16.1%. What about the UPI QR codes? So UPI QR codes total in India, look at this, 35 crore UPI QR codes, almost 35 crore, 34.6 crore. So there was an increase in UPI QR codes to 35%, and they are now 34.6 crore. Now what is the difference between the Bharat QR code and the UPI QR code? Do you know the difference? See, Bharat UPI QR code, it can be used to make person-to-person transaction, or even you can pay to businesses, right? The difference between the two. So UPI QR code is attached to your bank account. Okay. If you pay from UPI, your bank account money will be deducted. Okay. Now, of course, UPI is being slowly connected to the credit card also. Recently, UPI QR code was connected to credit card also. But in Bharat QR, you have multiple options. So in Bharat QR will accept UPI payment. Bharat QR will also accept credit card and debit card payment. I repeat, Bharat QR, first of all, it supports only person to business transaction. A normal UPI QR code you can do person to person and person to business transaction both. You can, for example, if you go to buy a vegetable, to vegetable vendor also you can pay. So you can do person to person or person to business transaction using UPI QR code. But UPI QR code typically accepts only payments from your bank account, whichever is linked. A Bharat QR code is used only for payments to businesses. It is not used for person to person transaction. And Bharat QR code will accept UPI, but also credit and debit cards. So that is the difference between UPI QR code and Bharat QR code. Now, obviously, UPI QR code is more, so because person to person, everybody is doing UPI these days. So you can see 34.6 crore UPI QR codes are there. And Bharat QR codes are how many? They are 62 lakh only, 6.2 million. Now, Reserve Bank of India, they have set a very big target. This is a very important MCQ question. And I found out after going very deep into the digital payment chapter of the RBI annual report. So Reserve Bank of India said that they will expand the UPI to 20 countries by the financial year 29. So a lot of countries, they are accepting UPI. You know, you talk about Nepal, you talk about Bhutan. I mean, there are so many countries which are accepting UPI now. But the number of these countries has to be minimum 20 by financial year 29. And who is doing this job of popularizing UPI? So you know that UPI is a product of NPCI, National Payment Corporation of India. But National Payment Corporation of India, they have set up a subsidiary company for popularizing the UPI abroad, which is called NPCI International Payment Limited. In short, you can call it NPCI means N, International means I, Payment means P, and Limited means L, or NIPL. NIPL full form is NPCI International Payments Limited, or NIPL. So NIPL is that company which popularizes UPI abroad. Now let's talk about the FDI. How much FDI came in India and from which country it came and blah blah. So look at the blue color here, because blue is the color for financial year 24. You can see that $11.8 billion maximum came from Singapore, then $8 billion came from Mauritius. So Mauritius was second, America was third, Netherlands pumped in $4.9 billion, Japan pumped in $3.2 billion. So these are the top 5 countries FDI, right? Then 6th is UAE, 7th is UK. And I told you that the RBI transfers the surplus to the government of India. I told you that is under which section? So RBI transfers the balance of its profits to the central government as per section 47 of the RBI Act. This is an important MCQ. This is an important MCQ, that RBI transfers. So that amount I told you, 2,10,000, that amount which RBI transferred to the central government was as per section 47 of the RBI Act of 1934. And you can see it increased significantly. And also there was a Economic Capital Framework, ECF, that was given by Bimal Jalan committee. Now Bimal Jalan is the former governor of the RBI. So Economic Capital Framework was given by Bimal Jalan. According to that framework, RBI calculates how much money we have to send to the government of India. So the Bimal Jalan framework you have to know, okay? They can ask you in the exam that RBI transfers the surplus to the government of India under which framework? So this is the Bimal Jalan Committee framework. Bimal Jalan Committee framework. And recently there was 608th meeting of the Central Board of the RBI, which happened in Mumbai. And one more thing that you have to know, yes, the surplus amount you have to know exact, which was 2,10,874 crore. 2,10,874 crore, right? This exact amount you have to know, right? Absolutely exact amount you have to know. And what about the CRB, contingent risk buffer? Contingent risk buffer, again, contingent risk buffer is again for contingency or emergency. Amount you already know. What about the percentage? So the RBI's balance sheet, whatever is the RBI's balance sheet, they increased it to 6.5% of RBI's balance sheet for the financial year 24. So whatever was the RBI's balance sheet, 6.5% of that has to go to the contingent risk buffer. In the financial year 23, it was only 6% of the balance sheet. They increased it from 6% to 6.5%. Now let's talk about Assam. Lead bank responsibility. In Assam last year, a new district was created. What was the name of this district? It was called Bishwanath district. Okay, it was called Bishwanath district. So which will be the lead bank? Indian Bank. Indian Bank has been given the responsibility. Look, what is lead bank scheme? This is a service area approach. It was given by Gadgil committee. All of this is a part of static banking awareness, but I tell as maximum as possible in even the current affair videos. Look, service area approach. See, there is always one bank which has a lot of branches in a particular area. You make it the lead bank. You make it the lead bank. So Gadgil committee said it that we have to follow a area approach. You know, then even the Narasimhan committee said it. So a lot of committees supported the lead bank project. So lead bank scheme was started by the Reserve Bank of India in 1969, and one bank takes the lead in that district. It has to take the financial inclusion initiatives just because it is prevalent in that area. So Indian Bank will be the lead bank for the newly created district called Bishwanath. Now let's talk about money changing activity. What is money changing? If you have dollar and you need rupee, let's say if you are going abroad, you need dollar. So you can go to whom? So you have to go to either full-fledged money changers. These companies are called FFMC by the RBI, or you can go to authorized category 2 dealer bank, or you can go to even a non-bank who is a authorized category 2 dealer. Category 2 dealer means any entity that is authorized by the RBI to do the money exchange, currency exchange. right? Now this circular is about FFMC and non-bank authorized category 2 dealer. And what does this circular say? So this circular says that if one FFMC has taken money from another FFMC, then 75% of that money they have to give to the public on a quarterly basis. Now what is the meaning of this? Let me explain. Let's say there is a FFMC or a non-bank category 2 dealer. We call it AD, authorized dealer. Category 2 AD, which is a non-bank or full-fledged money changer, right? So these are those companies where you can go and exchange currency. Understood? Now let's say there is one FFMC A, and there is another FFMC called FFMC B. And this FFMC has exchanged notes worth 100 crore from another FFMC. So now it has got, let's say, 100 crore in dollars. Let's say this FFMC A gave 100 crore in rupees to FFMC B, and from this it took 100 crore worth of dollar in exchange. Since it has now 100 crore worth of dollar, it cannot keep. So 75% of this money it has to give to the public in exchange, and only 25% it can use on its own. So 75% of the money that one FFMC or one non-bank category 2 authorized dealer gets from another one, 75% of that they have to give that money to the public, which means that public will come to them and get money exchanged. So they have to do that. 75% of the money has to go to the public. So that was the circular was about. Now let's talk about a circular that came on 24th of May. This is about Fincare Small Finance Bank, because it has been excluded from the second schedule of the RBI and it has stopped being a banking company. Why? Because Fincare has merged into AU Small Finance Bank. That is why. And the exclusion is applicable from 1st of April. Why? Because the merger is applicable from 1st of April. 1st of April 2024. So RBI approved the merger of AU Small Finance Bank. It has acquired Fincare, and now Fincare has been absorbed or subsumed into AU Small Finance Bank. AU Small Finance Bank is much bigger compared to Fincare. So if you have 2000 shares of Fincare Small Finance Bank, then in exchange you will get 579 shares of the much larger AU Small Finance Bank. This was the swap exchange ratio, 2000 to 579. If you have 2000 shares of the small company, in exchange obviously you will get less number of shares of the big company. So Fincare is small company, it has been acquired and subsumed. So 2000 shares if you have of Fincare, in exchange you will get 579 shares of the AU Small Finance Bank. Now Reserve Bank of India has appointed Lakshmi Kant Rao as the executive director with immediate effect. Now let's talk about a very important circular that came on 13th of May, which talks about the foreign exchange reserves of the RBI. So very latest on 3rd of May. So till 3rd of May, what were the forex reserves or foreign exchange reserves of the RBI? So total was $641 billion. Now what do the foreign exchange reserves, what are they made up of? So they are made up of foreign currency assets of the RBI, which are mostly abroad, gold that the RBI has, even most of the gold RBI keeps abroad. Recently 1 lakh kg of gold they shifted from Britain to India. Most of the gold also we keep abroad only. Special drawing rights with the IMF, International Monetary Fund, that I will explain you right now. And reserve transposition. Again, this is emergency money that is kept with the IMF. And this is 1/4 of the special drawing rights. So you can see the value of the special drawing rights is $18 billion. Approximately 1/4 of that is how much? 1/4 of that is $4.5 billion. So because when you withdraw the money in the special drawing rights, it is not easy. There are a lot of terms and conditions. But reserve transposition is emergency money. So this $4.5 billion, if RBI requires this $4.5 billion, it can withdraw it in seconds. IMF will not put any term and condition. Okay, so this is like emergency money with the IMF. Reserve transposition, RTP, is like a contingency money kept with the IMF. So all of these four, if you include, it will come out to be around $641 billion. Now let me explain to you what is a special drawing rights. As the name says, special drawing rights. Okay, So let's say, let me give you an example. So Iran wants to buy vaccines from India. Iran wants to buy vaccines from India. Okay. Now India has shipped a lot of vaccines. What is the value of these vaccines? 2000 crore rupees. 2000 crore rupees. Okay. So how will Iran make the payment to India? One, of course, you can use dollar because dollar is the reserve currency. Dollar is the most used currency in the world. It is a reserve currency. That is why. One is that. Now Iran, let's say, does not have dollars. Then what are the options in front of Iran? I repeat, Iran does not have dollars available. So what will they do? What will they do? Will they not buy the vaccine? Well, vaccine is needed. Otherwise, people will die in their country. So Iran will go to the IMF. And every country has a certain quota in the IMF. So let's say in IMF, Iran has some quota called X. In return of that quota, proportionate to the quota in the IMF, you have a certain money available to you. These are called special drawing rights. Now, special drawing rights is not a currency. Special drawing rights are available in 5 currency. Which are these 5 currencies? So these are dollar, euro, Chinese renminbi, Japanese yen, or pound sterling. To give you one example, I told you the special drawing rights of India are how much? $18 billion, right? India's share in IMF is 2.75%. This is the special drawing rights. India's special drawing rights in the IMF is 2.75%. And this 18 billion is corresponding to 2.75%. So if Iran has, for example, 0.5% stake in the IMF, their special drawing rights will be much lower compared to India. This $18 billion India can take from IMF and pay to some other country. But it is not necessary that the $18 billion India has to take in dollar. India can take the corresponding amount in other currencies also, like euro, like Chinese renminbi, like Japanese yen, or even the UK pound sterling. So in 5 currencies, you can take your special drawing rights. Understood? So SDR is not a currency, but SDR is an international reserve asset created by the IMF to supplement the official reserves of the member countries. Like, for example, in Forex reserves, we are including the special drawing rights because this $18 billion is available to us. If we need it, we can always go to the IMF and ask for $18 billion. So SDR can provide a country with liquidity in time of need, and that liquidity is available in 5 currencies. So if country A and country B, they have to trade, they can use SDR. They can trade SDR in exchange for currency, right? So for example, 2.75% of India, the value is approximately $18 billion. Now let's say India has to pay to some country. Let's say there is a war. Let me give you a very practical example. There is a war. Now in time of war, a country needs money for making weapons and all these things, for buying bombs and all. So India has purchased, I repeat, India has purchased $9 billion worth of missiles from America. Okay, $9 billion. Now, okay, our forex reserves are very, very good for 641 billion. But let's say we do not have those kind of luxuries available. Now, how do we pay to America? So we will tell America 2.75% of our SDR is worth $18 billion. So $9 billion is worth 2.75 by 2. So this comes out to be how much? This comes out to be 1.37%. So we will transfer 1.37% of our SDR in the IMF to America, because the value of 1.37 will be $9 billion. And America will be happy. Fine, I have got the SDR. So SDR can be used in exchange for currency, but SDRs are not a currency. I hope I have made my point. And what is a reserve transposition? It is an emergency fund. It is 1/4 of the SDR. So $18 billion is special drawing right. So 1/4 of that is 4.5. That is the reserve transposition. Reserve transposition is very easy to withdraw. It is like emergency SDR. So that makes up for our this thing. Okay. Now there is a floating rate bond 2024 that was issued by the government of India. It has a sovereign guarantee, of course, and it is called India Floating Rate Bond 2024. So what is the rate of interest that you will get for the next 6 months? You will get 7.03%. So always watch out for the floating rate bond maturity period. Here maturity is this year only, 2024. So you will get 7.03% for the next 6 months from 7th of May to 6th of November. And how do they arrive at this? So they take the 182-day treasury bill, last 3 auctions average. That comes out to be 7.03%. So that was the video for Banking Awareness May 2024 set 1. I have finished all the RBI circulars for the month of May in this video. And next video I will do the MCQs. Okay, I hope you enjoyed the video. Whenever I make the banking awareness video, the idea is to empower you with knowledge, not only from exam point of view, but also it will increase your confidence in interviews. In even I keep receiving the lot of testimonials from students that they have cleared so many bigger exams like JIIB, CIIB, and even when you will go for your training after you get selected in banking, everything will be so easy for you because you have these concepts, and these concepts will help you for lifetime. Okay, so I will see you in set 2 very soon. Thank you for watching Banking Awareness Current Premium.